Welcome back to Commercial Lines Innovation USA. I hope you made the most of the networking break. I'm now delighted to introduce the moderator for our next panel, Meghan Hannes, Cyber and Tech E&O Product Head at Hiscox USA. Meghan is responsible for the P&L of the cyber and technology E&O lines of business at Hiscox USA. She's responsible for defining the cyber and technology E&O underwriting appetite with a specific focus on a rules-based underwriting approach, including determining minimum security standards in order to control Hiscox exposure to attritional and systemic losses. Meghan's particularly adept at bringing in and maintaining strategic vendor relationships, both pre- and post-event services and risk engineering technologies, improving the risk postures of and supporting superior claims experiences for Hiscox insureds. Meghan, thank you so much for taking the reins today. It's without a doubt that your sterling reputation and extensive network of industry peers has made such a distinguished lineup for this panel possible. I'm really looking forward to hearing what you and your peers at AXA XL, Crum & Forster, Corvus and The Hartford have to say about plugging the cyber education gap with effective risk management services. Over to you, Meghan.
Rachel, thank you for the very esteemed introduction, only to be followed by an even more esteemed panel lineup. And we're thrilled about this topic because it's very topical. We're here today to talk about a topic that no one can argue has been absolutely percolating in the insurance marketplace since at least mid-2017, depending on who you ask. Yet only more recently has truly gained the spotlight as a topic of not only significance, but necessity. So our topic, as Rachel mentioned, plugging the cyber education gap with effective risk management and risk engineering services. So let's meet our very esteemed panel, Lauren, John, Nick, and Keith, and I will allow them to each introduce themselves and their roles at their respective companies.
Great, so I guess going in that order. Thanks, Meghan. I'm Lauren Winchester. I head up our risk and response services at Corvus. Corvus is an insurtech. We build smart commercial insurance products based on data-driven underwriting. My role, our team helps policyholders on the front end with risk mitigation solutions, and then we're available should there be an incident to help from an incident response perspective and also through the claims process. Prior to coming to Corvus, I was at a competitor doing breach response services, and before that was a practicing attorney doing data privacy work and litigation work. I guess over to John.
Hi, John.
Yep. Hi, everyone. My name is John Coletti. I am the Chief Underwriting Officer for Cyber and Technology at AXA XL. I've been in this role since 2012. I'm responsible for the P&L for AXA XL in the Americas. Have a team of underwriters throughout the U.S. that are dedicated to writing cyber and technology business. Prior to my work at AXA XL, I served in a similar capacity at a competitor and have been writing cyber insurance since the early days back in the late 90s with my friend Nick, who I'll pass it over to now.
Oh, thanks, John. My name is Nick Economitis, and I'm the Vice President for E-Risk with Crum & Forster. We're an insurer and part of the Fairfax family of insurance companies, and we've been working really hard on building some cyber products to be a little more responsive in the market to customers' needs. And like John, I've been doing this for a long time. Prior to being with Crum & Forster, I was an underwriter with Beasley, and prior to that, I was with AIG, where I was a product manager for their Net Advantage and ProTech lines. So with that, we'll pass it to Rachel.
Oh, and Keith, last but not least.
Keith, I'm sorry, my bad.
Sure. Hi, everybody. My name is Keith Tagle. I oversee cyber claim strategy with the Hartford. So my role at the Hartford is twofold. First, I oversee cyber claim procedures, data collection, and reporting for all of the various cyber products that the Hartford makes available across our different business segments. And then I'm also responsible for building the strategy for the Hartford cyber risk mitigation solutions as well, which we make available to our commercial insureds as part of their cyber coverage. And so as part of that, I help to develop strategic partnerships with third-party firms that offer cyber risk mitigation solutions. And I come from about 20 years of cyber defense, cyber operations background. So, a little bit different than insurance, but I've been in the insurance space for the past few years as well.
All right, thanks so much, Keith. I'm going to open the panel with a very simple, very rudimentary, yet really honest perspective when we were asked to tackle this topic. And one thing I could really think of was this. A marketplace does not necessarily need to be revolutionary to be disruptive. The risk management and engineering landscape is a myriad of options for brokers and policyholders to navigate. And it's a craft that the insurance industry will need to continue to hone and really perfect to support their shared and ultimate goals of broker support, meaningful and continued client engagement, and informed risk selection. The P&C market has leaned into risk engineering services for over 4 decades. So very simply, disruption does not always have to be revolutionary. So let's today look at the 4 pillars that examine the risk and reward of offering risk management and engineering services. We will take a look at plugging the education gap that's on a lightning fast learning curve, reducing the complexity of cyber products, value-added services of present and future, and improving the validity of customer data. So let's look first at plugging the education gap. And as mentioned, we're very fortunate to have 3 different perspectives on the panel: breach response, underwriting, and claims. Let's first go to Lauren and Nick. What do you think the cyber education gap with brokers actually is, and how can underwriters collaborate with brokers to help close the education gap on cyber risk?
Okay, well, I'll jump up and go first. I think part of the challenge, one of the challenges that we have is that we have everybody's at a different place. If you think of a broker that's been in the industry for a while, they may have gone to a high school that didn't have computers, and this whole internet thing is kind of new to them. On the other end, people that are younger in the industry grew up with computers and are much more knowledgeable about them. So our first challenge is that we need to deal with people across a whole continuum of where they're coming from in terms of education as a starting point. With that as a challenge, I think our best opportunity as insurers is to come at it with our special expertise. And our special expertise here is that we have an idea of where losses are coming from, what the causes of those losses are, and how much those losses cost. Using that information, I think we can provide some value-added benefit to brokers and to buyers by sharing this information with them. And, our challenge is really trying to explain what we're seeing in a way that people across that continuum that I described can understand, so they can meaningfully communicate it to their retail brokers, buyers, or everybody else in the chain of insurance.
Lauren,
and I think
go ahead.
Go ahead.
I was just going to say, how do we get clients to care about risk mitigation?
Yeah, I think that insurers are certainly doing our part to now be asking even tougher questions when it comes to security controls. And that kind of goes to this education gap as well. How can we best inform brokers who are really sitting in the middle during this whole process, who are having to go back and forth with their clients, better understand their clients' controls, communicate that to underwriter, go back down the chain at wholesale retailer, and you've got additional folks in the chain. So I think the ability for everyone to communicate about these security controls can be very challenging. And so what we're trying to do is really work on how can we better educate brokers, particularly when we throw our scan into the mix. and we have vulnerabilities that we're identifying on the front end during the underwriting process. How do you communicate those vulnerabilities in a way that brokers can understand and explain to their clients and not feel like they're just passing on information, but really empower them to understand what we're trying to do with these vulnerabilities, why they matter, and why we are deeming them critical enough to bring up during this process. So I really think it's about that communication at the point that we're providing that information is really key. Also, ongoing education through blogs and webinars to try and get everyone up to speed. And, you know, I think you can be young or old in the industry and really struggle with all the new technology and subjectivities that are being thrown around.
Nick, Lauren brought up a great point about scans, and I'll transition back to the underwriting lens. How do we translate these insights from risk management into better underwriting decisions? And this is a topic we're going to cover multiple times in the panel, but what's your initial thought on this?
Well, my initial thought is we need to do a couple of things. One, we need to understand what the scan results are and how they relate back to the losses that we're seeing. You know, chasing somebody about a scan result that really doesn't correlate strongly to loss is probably frustrating to them and frustrating to us. So that's the first thing that comes to mind. I lost my thought on the second thing. The other thing was, you know, we need to use the right tool for the right customer. And that's really tough trick. And something that the industry has not always done well at. I'll pick on our property and casualty friends because they have the worst reputation here, or the lesser reputation here. But you know, you can't use the same tool for jumbo accounts that you use for micro-sized accounts. So I think our next trick is to try to get the recommendations that we make and the feedback that we give to the customer and our underwriting guidelines, that they all make sense and are appropriate for, in one case, perhaps a very small customer, but then that they're different and are very appropriate for what might, in another case, be a very large, complex customer. That's really hard to do, but I think the carriers that can do that are going to see an uptick in business and you know, get favorable responses from brokers because that's what the market needs.
No, absolutely, no question. This is a big statement. It's the right statement. It's certainly the Achilles heel going forward, right? This is our Everest to climb in terms of segmenting the market into meaningful solutions. Keith, Nick brought up correlating loss to scans. What does success look like from the reverse angle? How can claims feed back to underwriting, whom then feeds back to brokers, whom then feeds back to clients? To Lauren's point, it's a long chain. What does success look like here from your claims perspective?
Yeah, so Nick and Lauren bring up a lot of great points, and it's something that we see directly correlating to our claims when it comes to cyber coverages. So, you know, so again, sitting within the Hartford's claims organization, I find it critical to ensure that there's a feedback loop back to agents, brokers, underwriters, and insureds as to what the true root causes and attack vectors are, which are causing the vast majority of these cyber attacks and claims and for insureds to begin with, you know, back to Nick's point. You know, and so not only just looking at scans and result of scans, but, you know, what is our internal claims data telling us about the causes of these attacks? So we all know that that insureds don't have unlimited time and resources, and as such, we really need to help them to focus on where the low-hanging fruit is, so they can kind of get you know, the biggest bang for their buck, so to speak, as it relates to where they choose to spend their time and their resources to reduce their cyber risk. So just as kind of a quick example as to how this can work, generally speaking, from what we see and most of the industry sees, ransomware attacks, for example, are actually traced back primarily to two very prominent attack vectors. One being phishing attacks, which has sort of always been the case for all cyber attacks, and then the other being something called remote desktop protocol attacks, or RDP attacks. So just looking at phishing and open, you know, remote desktop protocol as two primary ransomware attack vectors, and what we're seeing in our claims as to those are really the two main root causes of ransomware attacks. Having brokers and underwriters and insureds focus on getting their cyber house in order as it relates to just phishing and RDP alone could go a very long way to reducing an insured's risk of experiencing a ransomware attack, for example. But many brokers and insureds don't even know that these are the top 2 ransomware attack vectors seen over the past 12 to 18 months. And if they were to know this, they could focus on this low-hanging fruit to really help their clients.
Keith, you nailed it, right? So under the lens of what success looks like when we're trying to reduce complexity of not only cyber products, but what their products, the solutions, and what they're ultimately telling us, how do we make it easier for brokers, for example, to compare and explain coverage to Keith's point, right? If we start with 2 very common and pervasive threat vectors, and I'll pitch this out to John, Keith, and Nick, how do we make it easier for brokers to not only explain coverage, but the downstream services that often come with these policies now?
Yeah, I guess I could try that one, Megan. I think it's important to just get some perspective of this product and where we are sort of in its evolution. We're in the very, very early stages of a very dynamic and evolving product, right? So, some of these questions that you're asking are great questions, but we're not going to have great answers yet. And I think that is just due to the nature of a product that has grown into something that is pretty beefy in coverage, and it has a lot of insuring agreements, a lot of definitions, and they do differ from carrier to carrier. And I think at its core, many of these competitor forms are very similar, right? And there's been, a lot of, mimicking going on in the industry that has occurred over the years. So you do see a lot of sort of common terms over and over again. But it's going to be difficult for the brokers, right, for the foreseeable future, which is why you'll see me on the carrier side of the aisle for a long time. No desire to go to the broker side, particularly not in this environment.
That's fair. Brokers certainly have their work cut out for them, not only in a hardening market, but a very rapidly moving hardening market with, I won't call it dizzying, right, but dizzying amount of selection, not only from carriers, but once you get to the carrier, potentially downstream services. So Lauren and or Nick, any other thoughts on how we make it easier on the brokers?
Could I jump in there? Because I really agree with what John said. And it's going to be difficult. And, a lot of brokers clamor for a standard market policy form, but I really don't think that's what they want. Because the problem with a standard market form is going to be that it's going to be difficult for there to be any innovation in the form. And quite frankly, I think the whole cyber market exists because the GL, property, and other traditional insurance markets were unable to respond to the cyber issues quickly enough. So to fill that need, cyber insurance was created. I don't think we're to a point where the market or the environment is stable enough that we can have a stable policy, a market standard policy form without any innovation. I think brokers are going to continue to demand innovation of the form for new and evolving threats. So with that, my advice to brokers has always been that they should consider setting their own standards for what they want to see in a cyber form and then judge all the cyber forms in the market against their standard. I think that'll help them understand everybody's policy form in a different way and also give them the benefit of not being rooted in any one policy form, which may at some point not be appropriate or market leading for some of these evolving or new threats.
Nick, you bring up a great point about setting a standard. right, and brokers to compare and contrast markets based on their standards. And John brings up a great point in terms of the market. I've heard it described a few different ways, but more or less being in its teenage years. I absolutely agree, right? We're like the gangly teenager. What do we want to be when we grow up? What are our strengths? What are our weaknesses? Where do we go to college? What do we study? What direction do we go in? And that's the opportunity that the market has ahead of it. Keith, before we leave this topic, let's just make sure we stop on, from a claims perspective, how can we deliver more than just a cyber policy with these risk management services that we're talking about? What potentially could success look like? I know that's a really loaded question with a very open-ended answer, but would love to hear your thoughts.
Yeah, so I think that it's, first of all, clearly important that the coverage being offered aligns with the actual losses that companies of similar sizes and similar markets are experiencing when they are the victims of cyber attacks. So again, that's going to require some market research, of course, to understand what a certain insured's risks are as it relates to cyber attacks. But it's also important that agents, brokers, and underwriters utilize that continual feedback loop with whoever's handling the carrier's claims to gain insight into where the actual losses are coming from. So again, kind of looking at ransomware attacks again, for example, a lot of people understandably assume that the largest cost associated with a ransomware attack is going to be paying the ransom. And first of all, many insureds may not even choose to pay the ransom and as part of a ransomware attack, so there may be no cost there at all. But also many times the costs associated with other aspects of responding to the attack could far exceed any ransom amount. So for example, you're going to have business interruption costs, and when you have an insured who's losing revenue every day and so on while they're experiencing downtime, many times for 2 weeks or more, and that could far exceed a ransom payment loss, or perhaps the cost to actually recover their systems can be a very costly component of a ransomware attack. And then of course there's costs associated with engaging third-party firms and legal firms and whatnot. So having agents, brokers, and insureds and underwriters all kind of sitting down and discussing the appropriate considerations and coverages with an insured to really ensure that they align with that particular customer's needs, and risk tolerance really becomes a level of expertise that insureds are expecting more and more. And directly aligning with that is the expectation of having a suite of services or something to bring to the table to help mitigate those risks. So a lot of that insight and expertise all stems from, starts from that critical feedback loop as to what are the attack vectors, what are we really seeing from a claim perspective and a loss perspective, and then how do we come back and propose something to our customers as it relates to risk mitigation solutions.
What I'll do is, Keith, I'll pivot off the key word that you mentioned a couple of times, which is loss, right? So right now, the majority of the value in the cyber insurance market is that point of loss, right? And we're in this huge transitional phase where we're going from a product-centric market to a services-centric market, and continue to see a transformational shift in the market, certainly for the years to come. And to John's point, I think we're only at the beginning of that. Lauren, how does including vulnerability reports and cyber awareness training improve the market from your perspective?
Yeah, so I think, a lot of carriers, and us included, are starting to leverage scan technology, vulnerability scanning, in order to, at the front end with underwriting, be able to make smarter decisions from an underwriting perspective. And then there are those of us that are turning around and providing those reports to policyholders so that they can mitigate against any of the vulnerabilities found as well. But I think the way that you take it a step further is to actually do proactive vulnerability alerting throughout the policy period. with the policyholder. And that way you are identifying those critical vulnerabilities that you can see from an external standpoint. You can't see everything, but you certainly can point these vulnerability scans at a lot of critical vulnerabilities. And so the ability to identify which of your policyholders are potentially impacted, get an alert out that's meaningful, that explains exactly how to remediate so that there can hopefully be some low touch and they're able to self-help, but then also put it in plain enough language so that if that alert is not hitting the IT person, that the risk manager or the broker, if you don't have policyholder contact, is understanding the importance of that alert and who it needs to go to. And then add to that, who is the team that's going to sit there and be able to answer questions when the policyholder does inevitably have questions about how to mitigate against that vulnerability. And so this is where I really think the future of vulnerability scanning technology and alternative sources of data can go within the cyber industry. Best example I have of late is back in March with the zero-day vulnerabilities from Microsoft Exchange. We knew those were going to be exploited almost immediately and were being exploited by one threat actor group. And we knew that that could be exploited for ransomware and was. But when you can take your scan and turn it towards who has Exchange, alert those policyholders and watch the number of vulnerable systems go down and continue doing outreach to those that are still vulnerable, at that point, you can not just sit back and wait for the claims to happen, but actually prevent some.
It's a great point, and let's take meaningful and plain, because I really do think that is the two key themes from what we can garner from those external security scans and ultimate outreach campaign. So, John, how do we get customers to care, bouncing off of Lauren's point?
Yeah, I mean, customers have no choice, right? They have to care. I mean, I don't think this is at a point where I think all customers do care, right? I don't think we need to convince them that they need to care. I think where we need to do a better job as an industry is proving that we understand, right? Proving that we have expertise, right? And that we could actually provide some value to our clients. I think one of the ways we've fallen down in the past is, and you hear tales from brokers and, clients over the years where, they walk in a room or a call and the underwriters are not speaking the same language as the client, right? They're not understanding, they're, maybe not asking relevant questions. And I think some of the credibility over the years may have been eroded. That has changed, frankly, in the last couple of years. The level of expertise on the underwriting side and with the introduction of the insurtechs and the value that they've created have really kind of boosted the image of the industry. And now I think we do have underwriters in markets that care a lot and have that expertise. So we need to be sure that clients understand. We need to show them that we do understand by providing meaningful insights to them. And listening to Lauren talk, and she's making, a great case for their business model. And my fear is, though, that, that it just becomes a bit of a copycat environment here, and that all the carriers kind of jump to saying, hey, we need to do vulnerability scans and we need to let our insureds know what's going on and we could provide alerts. And if you're not doing that in a very meaningful, right, your word, a very meaningful way, you're going to kind of go back and erode a lot of that expertise and kind of goodwill that's been garnered over the years. And I know that's a concern that brokers have. It's a concern that we have. Because when you do, kind of expose yourself and open your mouth and provide advice and provide, expertise, it's got to be right. It's got to be good. It's got to be meaningful. And then you want to be able to prove to your client that there's a reward for them, right? Or there's an incentive for them to make these remediation fixes or, improve their security. And, if you're telling them something and they act off of it, they want to see the translatable results that come from it.
Absolutely. And that word credibility and meaningful, absolutely, I agree, right? we've been on a steep learning curve collectively as an industry, not only joining together cybersecurity, but cyber insurance, and starting to speak the same language, and then coming up with solutions that are meaningful to clients and can be digested. Nick, any final thought on that topic?
Yeah, just a couple of things real quick. I think it's good to remind customers, not that they really need reminding, but we're all better off when they don't have a loss. And to the degree that we can help them not have a loss, that's a big win, because nobody needs to be dealing with a data breach event. Nobody needs to be dealing with a ransomware event. All of our customers want to concentrate on executing their business and doing business. They don't want to be spending time in a conference room trying to sort out one of these events. So we can, as we've talked about, we can provide huge value when, to the degree, using our loss information, seeing what's really happening, we can communicate with them on the real things that they should be doing to prevent a loss. Two, and this goes right to the value that Lauren's providing at Corvus, we can help customers respond to a loss efficiently and effectively, because losses will happen. But enabling them to respond to something they probably haven't dealt with before, a ransomware event, a data breach event, it's the first time, it seems scary, it seems overwhelming. It's definitely a distraction from their day-to-day execution of their business plan. The degree that we can come in and say, we've seen this before, we know how to respond to it, and then enable an efficient and effective response, I think adds huge value. And at the end of the day, what I think we're all striving for are lower premiums to the customer. The better we can execute on these things, the better the premiums are going to be, and that's a meaningful reward to the customers. So that's a few quick thoughts on how we can add value and put these things into action.
A theme that we hear often in the breach response community is that it's always someone's first time. It's always someone's first time having their systems locked out. It's always someone's, risk manager's first time dealing with a ransomware event, to your point. And we as an industry have come a long way between solving that gap between cyber insurance and technology solutions. What I want to do with the time we have left is toss up to the group, now that we've examined that whole layered Swiss cheese approach, that's what I call it with my team, a technology solution, a cyber insurance policy, and ultimately resiliency, right? Because that's why we're here. We're all better off with less losses. And if there are losses, how do we help our clients recover well and quickly? To the group, and anyone feel free to chime in here first. If you could, articulate for me what product and or breach response, or a combination of both, solutions are you hoping comes out of the new data streams, the new educational insights that we're rapidly bringing together and culminating as a market?
Well, I think for me, what we've been working on and I feel passionate about is not just marrying the scan findings that we have, because the scan, it's not perfect and it doesn't see everything, right? So how do we work with policyholders to better understand their security posture, meet them where they're at, and then direct them to resources that they can use, other vendors that they can be leveraging, but not just, over to a consultant who's going to give them a set number of hours that can help them with really anything. For smaller companies, they're struggling with not having much budget necessarily set aside for that year. So what are the few things that you can identify for them that would really move the needle, that if they did nothing else this year but focused on those, it would make a huge difference? And how do we get that in front of them in a way that isn't so time intensive and going to require a human touch on everything, while still having humans and consulting available? And so I think really for me, it's how do we get a good chunk of our policyholders to identify those key areas to work on and into the hands of those that can help them, and while still providing a high level of service.
Yeah, I mean, one of the things that pops up for me, Megan, with that question is there exists now, and there's going to be many more kind of groups within the market that are going to have a hard time buying this coverage, right? Just due to they're just going to get, they're going to be uninsurable in some regards, right? And we're seeing some of the loss experience in some of those sectors already. You take a look at things like utilities and public entities, universities, just to name a few. I think that there's opportunity here for markets, carriers, whomever, to kind of take advantage of that vulnerability and to create some products and services that are specifically tailored for those industries that are having a hard time, and that that will have a hard time. And when you look at how you underwrite a certain size company in a certain industry and the services that are provided to those markets, whether pre or post breach, they're very different, right? I think one of the things that has occurred so far is we've all kind of built these platforms that are one size fits all, and in reality, that's not how this, that's how security plays out and how the claims are paying out and the breaches, right? There's a lot of commonality within industry segments and size, and how a FI secures itself is going to be different than how a water commission does, right? So I just think there's opportunity from a product and services side to kind of build some, unique, specific services and, risk management services, advice, what they should look out for, claim data, all that stuff that Nick was talking about. Could really, I think there's opportunity here for us to, it's a big market, right? It's a really big market. And I think carriers that could kind of maybe gain some specialization in areas is going to be something that is, we're going to need to improve on.
I'd say too,
from my
a couple things building.
I'm sorry, go ahead.
I'm sorry, Nick. Yeah, I was going to actually build on something that Nick, that you said, and something that Lauren said as well. When it comes to cyber, I think we, as an industry, really need to provide answers and not just problems to our insureds. So, for example, if answers to a cyber application aren't satisfactory, we can't just end our feedback to our customers there, right? I mean, carriers really need to also present resources and solutions to insureds to help guide them as to what steps they can take to resolve their cyber vulnerabilities, back to Lauren's point. Or, for example, if an insured's security score on maybe a third-party risk assessment or any type of risk assessment comes back with poor grades, I think we as carriers and brokers need to be there to not just hand over that report, which is really, again, nothing but a list of problems, but we have to be able to provide a corresponding list of potential solutions, or at least at a minimum point insureds to resources that may be able to help. So we need to be making insureds aware of such blind spots that they have, but also providing solutions to assist them with building out safeguards across, the full spectrum of cyber risk mitigation, from, proactive, kind of protection type solutions all the way over to reactive solutions and sort of recovery solutions to help them recover from attacks. And, the other point that Nick made is, we're seeing this continual shift in proper response to these types of cyber attacks that we're seeing, right? I mean, I think for years, the term out there has always kind of been a breach coach, right? So having, a third-party law firm available to assist with a data breach, right? I look at those same types of coaches now as sort of ransomware coaches, because for the most part, what they're doing is they're really helping insureds respond now to ransomware attacks. And everybody was so focused on data breaches and disclosure of personal identifiable information and credit cards. Now everybody's concerned with, ransomware, and ransomware has, by far just become the most common cause of loss. So now, we have to, as carriers, align our insureds with resources to be able to really respond to those ransomware attacks. And our customers really look to us to provide those introductions and those recommendations and referrals for that level of expertise. So we have to kind of stay, kind of one step ahead of those cyber attacks that are emerging, and really be there for the insureds to help them if they, if they have a claim, if they have an incident, provide them with the right solutions. Because, as Meghan said, we're sitting here, especially from a claim perspective, we've seen ransomware attacks hundreds and hundreds of times. We know what to do. We know who to engage. For the insured, most likely, it's their first time. So we have to be able to help them out.
Yeah, Keith, thanks for that. That actually teed up my comments really well, because there's a couple of things that I think we should do. One, I think we should keep in mind that quite often our customers need to buy limits of insurance for contractual reasons or just to protect their business. So one, I think we can help them by being efficient in our underwriting process and being smart in our underwriting process. And part of that is being a good listener, but also knowing what we think is really important. So we don't need to drag them through a gauntlet, but we can sort of make it, use these words again, efficient and effective, and for them to get the insurance that they need. So I think we can be good underwriters. Two, I think we can really help them prevent losses. And we can help them prevent losses, again, by going back to the loss information that we see. But, when we get the scan results, articulating to them why we think they're important, but then being good listeners in terms of their response, but trying to help prevent them from having a claim. Something we like to do, we like to give people quotes that point out some of the issues that we see in the scan, and we invite a response to those recommendations. But two, we also like to give them an offer to reduce the premium in consideration of them putting some additional controls in place. And just to give you a real quick example there, for very small law firms, we have 4 recommendations that we make. And just to give you a couple of examples, that they use MFA, multi-factor authentication, for their remote cloud-based email, which is what they're usually using. We'll give them instructions on how to set that up. We have some other recommendations, but for time considerations, we'll skip those. The point is, we point out that if they'll do these things, we'll give them a lower premium, and then we help them put them in place. Which really gets me to my third point, that we can help people put the right controls in place. Lauren talked about the things she's doing at Corvus. We have our cyber response team. They're really ready to talk to customers about these things and help give them some direction and guidance on how to put different controls in place to improve their posture so they can lower their premium. And as we said, we're all better off if they don't have a loss. And then last, and Keith, I think you nailed this, we can be prepared and set up the networks, have the right attorneys, the right forensics vendors, all the right service providers to come in and connect them with the insured, who, and Meghan said that maybe they probably haven't dealt with it before. Well, we've seen some that have dealt with it before. Sometimes it's their second time. But presuming that it's their first time, we can really help them, provide some guidance, enable them to be efficient and effective, and get back to executing their business plan and not dealing with a ransomware event. So those are a bunch of things that I think we can do to really help customers with their cyber insurance problems.
Such great direction, a lot of energy in the market. We all have not only a responsibility, but the ownership, right, to get this right. And if I might attempt to surmise the theme of today's panel and the outcome of our discussions, I wrote down bespoke, digestible resiliency. It's an absolute mouthful, but what it really means is we've got to be able to carve out this market into solutions for the micro, mid-range, large, and so on and so forth, because the lessons of the past has taught us that it's not necessarily one size fits all. And above all else, we have to be good listeners to hear what our clients want, what works for them, and how they can translate our offerings into meaningful solutions and stability. and resiliency, most importantly. So thank you to Lauren, John, Keith, and Nick for a great panel. I know the audience learned a whole lot, and we'll turn it over to Newton.